Markets are on edge. Hey traders, my name is Blake Morrow and you are listening to the week ahead video. I'm with ForexAnalytix and we're going to get to it. You know, we have the Israeli-Iranian war that's actually happening. Is the US going to enter into the fray, or is the Trump administration just going to allow diplomacy to take place and maybe wait a couple of weeks before it happens? Or is the Trump administration just simply waiting to get their chess pieces right in the right spot before entering the war? You know, there's a lot that's happening right now and it's got markets on edge. And we're going to talk about all that and more on this week's Week Ahead video. So a couple of things that I did want to mention is last week we had central banks galore. We had the Fed, we had the Bank of England, we had the Bank of Japan. We even had Norges Central Bank that provided or gave the market a surprise interest rate cut. We had the Swiss National Bank as well. So there's been a lot of activity. Next week, we have Banxico. So we're going to take a look at what's happening with the US dollar Mexican peso, because you guys knew from last week it was going to squeeze, and squeezing it is doing. So I'm also going to give you my top 3 setups, trade setups of this week, and we're going to review the ones from last week, like the dollar mex. So make sure you all stick around. And if you like these videos, give me a thumbs up. Give the team a thumbs up for getting this video out to you ASAP. Also, comment down below, because there's probably, undoubtedly, things that I'm going to miss. So I want to hear from you. If there is, just jump down in the comments below. Also, you'll notice right on our front page, it says something big is coming. Check it out. If you click that link, it takes you to our Trading Analytics page. Now, this is important, guys, because we are now trying to give you a heads up about what is happening and what we're going to be doing in the months ahead with Trading Analytics. All you have to do is subscribe to our newsletter. Just put your name, put your email, because you will be entered for this month. We're giving away a trader funding program assessment to one lucky winner. But don't worry, for the next couple months, we're going to be giving away things, and we're going to be letting you know how ForexAnalytix is evolving, what different features we're going to be adding. So make sure you subscribe to that list right over there, right there. You see it? Put your name there, put your email address, and put it the right email address so you do get subscribed, because that'd be silly if you won and we sent the wrong email. So, and if you're on the email list already, don't worry, you're automatically included. But I would enter that again just to double check. All right. So I'm going to talk about all the stuff that is happening this next week. And guess what? Nick from Trading Analytics, he's going to be here in a little bit to also give you an update on the S&P, some of the indices. So I'm going to skip over those. I'm going to go over what's happening this week, cover just a couple key components of other markets, like what's happening with gold and silver. We're actually going to talk a lot about silver. And I'm going to talk about some of these currencies that might be affected by what you see happening throughout the course of the week. Now, remember, you can follow along on ForexAnalytix. You can follow along right here on our calendar. You can select whatever days and dates that you want. I'm going to be covering all the events that are happening this next week, so you can follow along. I'll just keep it here on the Live Squawk feed that you get included with ForexAnalytix. So let's talk about Sunday, or actually, excuse me, Monday. Monday is kind of a big day because we're going to have not only the Eurozone PMIs, but the UK and US PMIs. So we're going to see if, we've talked a lot about the US exceptionalism kind of waning. Obviously, we've seen the euro rally quite substantially over the course of the last couple of months. So as I said last week, we are now in a market where we're getting two-way price action. And you can see since last week, I said it right here on the Week Ahead video, since last week, the euro's come down. It's bounced the last couple of days. We are now starting to see two-way price action. And next week's data could really set the pace for what the euro does next. Does the euro break out above 116? Or do we break through 114 and head a little bit lower? This is a really important topic of conversation for me, because when you're talking about the euro as a whole, you guys know I've been looking for the euro to rally to 116.50 to 117. It was actually one of the trade setups from last week that didn't pan out. It didn't pan out because we just didn't get there. It's not like it didn't work. It didn't quite reach there. So that means that that's still in play. If we get up to the 1 116.50 to 117 level. I still think that is a good level to be on the short side of the euro, just for the record. And for the record, if we get there, guess who's going to get on the short side of the euro at 116.50 to 117? Yeah, I would. All right, now the other thing I want you guys to pay attention to is this rising trend line in the euro. And I'm going to show you something really fast. Let's get rid of this. Let's get rid of this. We're going to get rid of this. We don't need that for now. We can get rid of that. We're going to get rid of that. And you can see that rising trend line. And then I want to show you this. From this low to this high, the 38% retracement comes in at 114.20, right? You can see it right there, right there, right there. You guys see it? Okay, so that's a 38% retracement. It's also going to coincide with that rising trend line should we get there. So, you know, when I just said a little bit ago, if it breaks through 114, I think that would be kind of bearish, at least in the near term. So I want you guys to pay attention to that because of those Eurozone PMIs and speaking of which, the UK PMIs. Let's take a little look at the sterling. Well, remember last week on the week ahead video? So you can just go listen to last week's video if you want. I said the pound's breaking out above the 134.50, but it wasn't really breaking out, so it's making me a little nervous. Well, you can see why it made me a little bit nervous. The sterling actually sold off this week, and now we are probing some pretty critical support. So from here, what I'd like for you guys to do, forget this flag pattern. I think the flag pattern's almost nullified. But what I'd like for you guys to be looking at from here on out is this low, okay, which this low comes in around 134.10. That level is going to be very, very important this next week. And so if we break through that level because the UK PMIs come in worse than expected, you got to imagine, take a step back and put yourself in somebody's shoes that actually owns sterling, and they're like, oh, I'm long, broke through 134.50, and like last week, what we were saying is there's been very limited momentum to the upside breakout. So how many people are stuck long going, shoot, I bought this thing 3 weeks ago, and I'm barely making money, or I'm actually losing a little bit of money? They're starting to get nervous. So you think about the person on the other side of the trade. If sterling really starts to break back down below that 134 level, I think it's going to freak some longs out. So I think there's going to be some selling should we start dipping below those levels. So keep an eye on those PMIs next week. Tuesday, we have Canadian CPI, and that's day one of the Humphrey Hawkins testimony, which was named back in the Greenspan era. I forget exactly why it was called Humphrey Hawkins, but it is. That's what it's known for. But let's talk about the Canadian, the dollar Canadian. Now, the dollar Canadian is in squeeze territory. You notice how last week we talked about the importance of the support at the 88% retracement. Just so you guys know, these charts that I use for you, they're called the week ahead charts. The charts that I use all week long are my morning edge charts. It's my morning edge. You can see the analysis is here. You can actually read the analysis if you go right to the basic technical analysis on ForexAnalytix and you go to the daily charts. You can see that chart is exactly the same chart as this chart. I have to zoom out a little bit and put it on a daily, but you can see these are actually the same charts with the same lines. That's because I upload the analysis every afternoon on ForexAnalytix. Now, on the week ahead charts, these are the ones I use specifically for this video every week. That means I leave my drawings from the previous week or the previous couple weeks if I haven't looked at it. And that's why I'm going to share with you that we were looking for that support to hold at the 88% retracement. And guess what? It did. The problem is that we had a confirmed low in RSI. That means that the downtrend probably isn't over. But just because we have a downward bias in the dollar yen or the dollar Canadian does not mean that if we have a weak Canadian CPI print on Tuesday that we could see the upper end of this channel, which comes in at, let's go ahead and move this little circle, it comes in right around 139. So it wouldn't surprise me to see a move in the dollar CAD back up to the 139 level before it's all said and done. So if we do, next week, guys, if we see a move back to 139, that might be a good level to be on the short side of the dollar CAD. All right, moving along. Day one, Fed chair, the Powell. Remember, we just heard from Powell this week for the FOMC. Are we going to learn anything new? I don't think so. The Fed is, and let me put it in the. Let me grab the dollar really quick. The Fed is in wait and see mode. Okay, they are, and it seems like they are a little bit more dovish than the market would think. The market is expecting that we're still going to get 2 rate cuts this year, but given the fact that they're more hawkish on inflation, more dovish on growth, they might be slant a little bit more dovish, but the dollar is actually looking pretty decent. Now, if we walk away from the Humphrey Hawkins testimony, and why could this happen? Well, you have senators from the banking committees, from that are going to be drilling, too late, pal, right? As far as Donald Trump is concerned, President Trump says he's too late. Well, how many Republicans, GOP, congressmen and women are going to drill the crap out of Powell and say you are too late? You should be raising rates, you should be lowering rates, not raising rates, lowering rates, blah, blah, blah. Well, how about if we walk away from the Humphrey Hawkins testimony and we're like, damn, he didn't care what any GOP senator had to say or congressman or woman. He still sounds pretty hawkish. Well, the dollar could actually squeeze. The levels I'm looking at right now is 99.50, which is right here, and then 100.10, which is right here. Both of those levels are very important. And if either one of those levels break and you're short the dollar, we're probably going to see a squeeze. We've talked a lot about this over the last couple of weeks, that the dollar positioning is very bearish. Every bank is assuming that the euro is going to see 120, 125, which I do agree with, as I told you last week. However, everybody is tilted in one direction. And when everybody gets tilted in one direction, the boat or the market likes to recorrect and get back to the mean. So you got everybody bearish. I wouldn't be surprised to see a nice squeeze in the dollar next week, especially if the Fed chair is more hawkish than you would think. That's day one. Day two is Tuesday and Wednesday. Now, also, so one of the things that's happening throughout this week, and I'm going to leave it on the dollar really quick. On Monday, we have existing home sales. Wednesday, we have new home sales. And those numbers are going to be pretty important because one simple reason. Most Americans, their net worth is, if they're not in the stock market, which, a majority of them are not, but a majority of Americans own homes and they have most of their wealth in real estate. They bought a home after the financial crisis in 2007, 2008, 2009. They bought a home after September 11th, 2001. They've owned their homes for a long time. They have a lot of equity. And they look at that from a retirement point of view. So when or if, I think the housing market is correcting, but if it corrects much further, it's really going to start to weigh on sentiment. And so watch these housing numbers. One of them, again, existing home sales on Monday. On Wednesday is going to be new home sales. Thursday, we have U.S. final GDP. Shouldn't be too much of a mover. We have unemployment claims, which we have to watch, because if the unemployment claims get above 250,000, 260,000, that's where it's going to start to get my attention and most other market participants' attention. We have durable goods orders, but also on Thursday, we have Banxico. So Banxico is going or supposed to keep rates unchanged. But what you're seeing in the dollar MEX is what we talked about last week, is a squeeze now is starting to unfold above 1910, which should take us now to 1919, which is right about here. Okay. So if we get above 1919, then we start making a bigger squeeze. Now remember, and let's get rid of this zone here. Remember, at the beginning of the year and at the end of last year, when President Trump was elected, the first thing I told you is the dollar Mexican peso, this is back in December and November of last year. I said the dollar Mexican peso is probably going to trade back down to the 18 level. this week or last week, we went as low as 1880s. So we did it. Took us 6 months, but I said in 2025, we're going to trade it back down to 18. We're there. We've done it. Now what? Well, now the market is extremely bearish dollar mex or bullish Mexican pesos. So would there be a natural unwind or squeeze? I think that is the risk. So what I'm going to be looking for, guys, is a move back. Here, let's get rid of this. A move back above. Actually, you can probably see that's what I talked about a long time ago. Anyway, let's get rid of that. We don't need it now. If we squeeze much further above like 1920, we're going to be trading back at 1950. Now, I still think the dollar Mexican peso overall is moving lower, but there's two sides to every market. Just because the market is in a bearish trend doesn't mean we're not going to have, your short squeezes from time to time. And I think one is brewing here in the dollar max. Now, Banxico, we'll be watching for them because if they are a little bit more dovish based on current economic environment, the tariff war and whatnot, and if the market starts to believe that Banxico could start lowering rates after this pause, next thing you know is we'll have the dollar Mexican peso racing back towards 1950. So keep an eye on the dollar mex. Now, Thursday, we have Tokyo CPI. I do want to show you guys this with the dollar yen. I think the dollar yen, I guess I did talk about last week. Last week I said, hey, we're in a triangle formation. Top of that triangle comes in at basically 146.20. We talked about this last week. That's why it's drawn. We got as high today as 145.95. So we're coming into really major resistance. And by the way, if you haven't seen it, from this high to this low, this is a 618 retracement. That's what makes this resistance so vitally important. So if we break above, 146 and a quarter, this would be very bullish. But I still think it's a triangle, and when we're in a triangle, we're in the apex of the triangle, it is quite messy. So I wouldn't get too bullish at this moment in time. All right. The next thing I wanted to cover is we have Tokyo CPI. So if that inflation data is strong. Now remember, they are year over year right now. It's 3. Let me make sure I've got that number correct. It's 3.6%. Let me double check that number. Yeah, 3.6% year over year. That's well above the BOJ's mandate and rate. Now, it is Tokyo. That doesn't mean that's all of Japan, but Tokyo CPI might actually matter, especially if it continues to come in hot. We actually could see a reversal of the dollar yen back into the lower end of its triangle, if that is truly the case. But what I wanted to point out is we are really in the apex of this, and it's going to get a little messy before we see a breakout. All right. On Friday, we have PCE and Canadian GDP. Now, the inflation data, the PCE, we've got most of the components for PCE. It is the Fed's most, looked at inflation gauge, but also the Fed Chair Powell already kind of set the expectations during the FOMC this last week. So I don't think it's going to be a real big mover come Friday, but you never know. I mean, I think the bigger mover right now is going to be what's happening with Israel and Iran and what's happening with the U.S. And I do want to just talk about this really quick because we talked about it a little last week. Look, the U.S., everybody, I think the market does expect that the U.S. will be involved in the Iranian-Israeli conflict to a certain extent. Whether it's through those bunker busters that has been talked about over the last few days, sending those in. There's going to be some sort of military escalation with the U.S. But I don't get too worked up about it right at this moment in time. But it's going to depend on the resilience and resistance of Iran over the course of the next weekend, this weekend that you're watching the video, or maybe this next week. So seeing what their response is to everything, that's something, and it seems to me that Israel does not want to stop. So I think, the market assumes the best, but is not priced for the worst. So the reason why I say that is because there are risks that we will see gapping over the weekend if things, talks don't pan out, and things could escalate a little bit further next week. So yeah, I just gave you all this economic data to look at, and it could move these individual currencies and move the markets. But I really think the elephant in the room right now is what's happening in the Middle East and the Strait of Hormuz too. So one of the best ways to follow all of this is just follow crude oil. I think crude oil tells you a really good story right now. A good story. Maybe that's not the way I should have phrased it, but a move above the 200. Whoops, that's not what I wanted to do. Let me remove that. While we're above the 200 DMA, I still think it's bullish. I think I said that last week, and nothing's changed in my view about crude oil. But I think if you start to see crude oil back below the 200 DMA, that's where it turns bearish, and that's where you start to get, in the market's opinion, not my opinion, the market's opinion, you get back below the 200 DMA, and that's where the market's saying, okay, coast is clear. Let's go back to worrying about tariffs. Let's go back to worrying about economic data. The Iranian-Israeli possible U.S. conflict is not a big deal. But while we're above that 200 DMA, and by the way, just so you guys can see it, you would know it if you're in the ForexAnalytix community, because we talked a lot about it, but I'll just do it for you right now. Take this low to this high. You'll notice that we have paused at the 38% retracement. Right there, $69, $68 depending on what CFD you're using or what have you. But you could just do the Fibonacci work yourself. That 38% retracement is perched just above the 200 DMA. That means right now, while we're above the 200 DMA and above that 38% retracement, it is bullish. That means the market is on edge. That means the market is concerned with what's happening in the Middle East. Back below the 200 DMA, things change. Now, as I mentioned, Nick Groves, he's going to come in and he's going to talk to you a little bit about the different indices, what's happening in the S&P, what's happening in some individual stocks and some of the other indexes. So with that being said, enjoy your time with Nick from Trading Analytix.
Hello everybody, my name is Nick Groves with Trading Analytix. Blake, thank you as always for passing on over to me. And today I'm going to kick us off with something a little bit more special than usual. I wanted to show you all our landing page of something big coming soon. This is the link here. I put it in our Trading Analytix bio, so feel free to come along and tag it there, and you can go ahead and sign up. And you will have access to a potential $25,000 account through TFP just for becoming one of the first to know about us soon. We've been working on a lot of fun things and exciting things that I think you all will appreciate. So please go ahead and subscribe to the newsletter. Just add your name and email address and punch yourself in for a chance to win a $25,000 account through TFP. And also for anyone who's been following me for a while through Trading Analytix, I just want to say thank you so much for your support, and we're looking forward to bringing a lot more to the table for you all. So with that, I'm going to go ahead and kick off some analysis. So take a look here at SPY. You'll notice I have this ascending channel listed out. I'm going to go ahead and cut my video. We have this ascending channel listed out, which recently broke on Wednesday. Kind of flirted with breaking it on Tuesday. You know, charting spot contracts is a little bit difficult sometimes, but what you should note is that we are breaking the 38.2 at the moment. I had support listed out here. I felt if we got down here, it needed to hold. Tried to bounce a little bit this morning, but as you'll note, we are taking out the lows at the moment. There's a few different ways that I've been looking at the S&P. Obviously, this is the spot contract, so it doesn't show all of the crazy overnight action we've had, which we've certainly had a lot of with all of the geopolitical things going on. I wanted to point out this other formation of this ascending wedge here that we have broken down from. We broke down on Wednesday, back tested a bit this morning. You know, those moves earlier, you could say it was from headlines. I'm sure that aided in it, but I also want to mention we did have quadruple witching today, which only happens 4 times a year. So we've had, expect a lot of volatility on days like that. And you'll note that we back tested the breakdown resistance line now, former support. So I think there's a chance that we could head lower, especially if things continue to pick up geopolitically. But for the moment, I'm only going to be using this smaller range here to determine support and resistance. So as you'll notice, support is going to be close to this 50% retracement at 5,900. However, given that we've spiked near it a few times, I imagine we slice through it like butter next go, and I think 5870 or so is likely that more firm support. Now, if we're going to have a deeper pullback, I'm actually looking for, I am looking for this overall 38.2 level closer to 5,600. I imagine we could stall ahead of there closer to 5,700. So you'll notice that I do have this green zone listed out, and that is my support zone that I'd like to be long from. Now, I want to mention there is some statistics suggesting that the second half of June could be weak. The median 2-week return for the S&P since 1950 shows that the second half of June is quite weak and the second half of September is quite weak. Now, could we see some situation where we begin to drift lower, closer to 5,800, 5,700, and catch a bid? We certainly could. Notice the first half of July is oftentimes quite a strong 2 weeks. So I'm not ruling out the idea of all-time highs still. I'm just suggesting we might have a pullback ahead of there. We had our go at it up here. We still can obviously turn around today and blast higher on, who knows what news that could come out. But we've had good CPI data. We've had decent jobs data. We've had some deals with, China, the UK that are trying to get ironed out. So I feel as if this should have already broken to all-time highs. Maybe we need a pullback and some type of rally maybe in the first half of June where big money decides to step back in and maybe give us another push higher. Now, let's also talk about big tech. You guys know how much I love big tech, and I've been pointing out this Mag 7 chart. Well, I guess I've been gone for a couple weeks. Thanks for waiting. But this chart right here, the MAGS, this is the ticker up here, MAGS. I've been speaking a lot about how it needs to hold this 786 here, and it has. Now, from here, I think we could see a bit of a pullback. What would that look like? Let's go ahead and take a look at the fibs. I am looking for some form of a 38.2, a 48, around 48.60 or so. Maybe it drifts down. Here, take a look here. Say it breaks a little bit of some support here at 52, stretches down just slightly. I would likely be a dip buyer down there unless something catastrophic is going on. We do still have NVIDIA in this head and shoulders pattern, but it needs to break soon. So close to all-time highs. I think it's had its shot. Could next week be a little bit of weakness? I think that's fair, but I am looking to buy dips after pullbacks. Let's also take a look at Google here. This is one of the charts that I think is a little scary. I've been mapping out this bear flag for you all in the community. We tagged the 618 up here, and now we're getting close to breaking bear flag support at 166.48. So, in the event that's taken out, will that suggest that we don't have a run at all-time highs and maybe this market is going to roll back over? It's certainly possible. And when you take a look at stocks like Apple that really should have caught a bid the last few weeks with all the China news, it's still sideways. Let's just take a moment to go ahead and overlay the S&P. What you'll notice is that the S&P has been on a tear since the third week of April, up higher. Apple has been stagnant. Don't forget, this is one of the heaviest weighted stocks in the S&P. NVIDIA and Apple fight hand in hand for who's going to be the heaviest weighted. And the fact that this cannot seem to get off its bum is interesting to me. It's broken down from this triangle. It back tested it earlier this morning. Can it hold below 200? And in the event, let's say 190 is broken, going to go ahead and alert that up. I think that it could be showing signs that the market could be in for some turmoil. If you're looking for more analysis like this, please go ahead and follow us at Trading Analytix. Don't forget to sign up. We have a lot of exciting things coming for you all soon. And with that, I'm going to go and pass it on back to Blake. Thank you so much and have a great weekend. Cheers.
Thanks, Nick. I appreciate the update. Even though I haven't seen the video, I always watch it after the fact, and I know you always come with your A game and you bring some of the best setups and analysis to the market, and I know our traders really appreciate it. Like I said, I did want to talk a little bit about I did want to talk a little bit about gold and what gold's doing. And I am going to mention silver just because silver will be in one of our top 3 trade setups for next week. So make sure that you're listening to the very end of this video to get those three setups for the week. But last week we talked about gold, hitting that resistance at the 78% retracement and it mattering. Well, we did hit it and we rejected it. So that is to me, that's a big deal. The reason why that's a big deal is because we're actually carving out a lower high. Does that mean that gold is bearish? Absolutely not. But what I'd be focusing more on right now, I'm not calling you moron. I said I wouldn't call you a moron. No, I said more. I would be looking at, no, I didn't call you that. I would be focused more on this trend line right here that comes in around 3,300. You guys know I'm just messing with you. Anyway, I know you're going to jump down in the comments below. And if you do, I'm going to laugh about it. All right. So, and then I know you're actually listening to what I have to say. That rising trend line comes in around 3,300. If I was long gold, I would be more worried about that level. If we start breaking below that rising trend line, that means we're below the 50 DMA. That means we could be opening up for some downside. And then you have to start looking at gold more as a long-term kind of flag pattern or long-term consolidation that looks like this. This is the way I would be viewing it. Basically, if gold breaks below 3,300, it could open the door for maybe a move back down to 3,000 before a resumption of trend. It means we're just having a long-term consolidation up at this major resistance. So that's how I'm viewing gold right now. Okay, this is the time that I do want to. Oh wait, let me see. Wait, hold on, really quick. Gold. I don't really need to talk about copper. I talked about crude. Nick talked about the S&P and a couple of the other indices, I'm sure. One other index I did want to talk about. I'm sorry, I did want to talk about this really quick, just because Chris Weston brought it up. He brought it up in the trade-off. Also, I posted it this morning. I posted it actually pretty much every day. If you go to the S&P room and you go to my DAX chart, I post this in the DAX. You can also find it right here too. You guys think that ForexAnalytix is just currencies. It's not. We have crude. There's the dollar index. Here's silver. There's the DAX, right? There's treasuries. So you can go, and by the way, did you know this? Let me just show you this. You can actually grab, these columns and move them around, and put them wherever you think is important, and it remembers it. Anyway, the DAX, you guys can see this chart. I'm getting concerned because now we're below the 24% retracement. Okay, and I posted the chart in our S&P room that 24% retracement is really important. And then also you see the 50 DMA is also right there. If we get below that 50 DMA, I would be concerned with longs because we already have a false breakout that's brewing, and now we are at risk of pulling back towards the 38% retracement, which comes in at 22,200. So if you guys are trading the DAX below Thursday's lows is not bullish. It's actually the opposite of that. It'd be bearish. All right. So anyway, I did want to mention the DAX before I move along. So this is the point where I'm going to talk about the review of the top 3 trade setups from last week, but I'm going to give you top 3 trade setups this week. But the best way to take advantage of this is through the trader funding program. So stand by for this quick, less than 2-minute video from the trader funding program. Are you looking to get funded as a trader? Why would you want to get funded? Well, the markets are extremely volatile. There's a lot of great opportunities, but because of the volatility, you don't want to risk your own money. You'd rather risk somebody else's money. That's why traders get funded. At Trader Funding Program, we have 2 different options that you can choose from. One, instant funding. That means immediately you can access up to $100,000 in capital. Now, by doing that, you have risk parameters you have to follow. You can't lose more than 8% on a trailing basis. That means as you're making money, you can't lose more than 8%. You also can't lose more than 5% intraday because we want to make sure you can control your risk. That is your instant funding program option for you. But let's say you wanted to take a more economical approach. You can access up to $1 million with the one-step assessment. Now, the one-step assessment, that means that you can't risk more than 6% of your high water mark to pass your assessment. That means as you're trading a demo account, as you make money, you can't lose more than 6% with an unlimited amount of time. Once again, you can't lose more than 5% intraday because we want to make sure you can control your own risk. Now, with either option, you have the ability to keep up to 90% of the capital that you make, 90% of your returns. That's pretty awesome. You know what else is great? With either one of those options, you get included in the ForexAnalytix community for a certain period of time. The ForexAnalytix system does analysis on 30 different instruments, everything from currencies to gold to indices, and it gives you different trade ideas, analysis, live squawk feed, so you're up to date on news, you have risk management tools, everything that you would need as a trader in your toolbox to help you become successful. But more than that is you're included in the ForexAnalytix community, the private chat rooms where you have access to me and other analysts from ForexAnalytix. Imagine being able to see what I'm trading, to be able to talk to me and other analysts and other traders and see what they're doing and ask questions. Why trade alone when you don't have to? You should utilize a company like Trader Funding Program for your funding needs. So check out Trader Funding Program for more information. I'll see you soon. All right, guys. Yeah, so like I said, I wanted to cover the 3 trade setups from last week. So we're going to start with that. And then I'm going to give you the 3 setups from this week. So last week, dollar Mexican peso long above 1910. Well, here we are. And we're at highs of the day. So we are at 1914. If you bought it at 1910 and it's at 1914, it's a winner chicken dinner. So trade setup number 1, it did work. And I believe we're heading towards 1919. So keep that one on the radar. And I think it looks pretty good still. All right. So trade setup number 2, short the euro dollar at 116.50 to 117 with small size. That didn't happen. We didn't make it up to 116.50, but that trade setup is still valid going into this next week. But trade setup number 1, it worked. It was good. Trade setup number 1, it worked. Trade setup number 2 just didn't come to fruition. So it doesn't count for us or it doesn't count against us. So 1 for us, 1 nothing. Last one, short S&P below 59.20. So did you know that we hit 59.20 yesterday? Well, we went as low as 59.16. You can't really count that against me because that was actually just before Juneteenth closing is basically 59.20. I mean, look, we know that that's really critical support and we have to get a nice close below there. So that one didn't happen. I was looking for short S&P below 59.20. We just keep hitting that support. So 1 trade setup worked. 2 trade setups didn't happen, but does that make them invalid? No. Those 2 trade setups, like the short the S&P below 59.20, that's still live. And shorting the euro at 116.50, that's still live should we get there. But this is the time I want to give you the top 3 trade setups for this week. So the number 1 for me is now you know with certainty because of what happened this week that below 59.20, that is the setup for this week. Is the first setup for this week. I'm just going to repeat from last week. We get a daily close below 59.20. That should take us back down towards 57.50 right here. So we want a nice close, sustained break below there. That happened literally just as Globex was closing before the Juneteenth holiday. So trade setup number one, once again, repeat, break below 59.20. I'm going to be looking for shorts. Trade setup number two, long the euro dollar at 114.20 right here and stop and reverse below 114. Okay, so if we get below 114, you got to stop, look for a short, because I think we're going to drop right to 112.50, right to here, right? But while we're above 114.20, you do want to play it on the long side. So I'm going to play long with an intention to stop and reverse should it go down. All right, trade setup number three. Long silver at the 38% retracement, which is just above 35 bucks. Now, silver has been going for a hell of a run, and I think you have to play into the bullish breakout. So let's take a look at silver. Here it is. Okay. Let's go to the daily chart, and I think you remember from a couple weeks ago, I said, hey, we break through this resistance, we're going higher. Obviously, that's why that arrow's still there. Well, guess what? We are pulling back a little bit. Now that 38% retracement, or excuse me, that $35 level, or just above 35 bucks, that's where I want to play on the long side. Now, you just heard what I had to say, so I'll say it because I already know the level. But if you take this low right here to this high, you'll see the 38% retracement is at 35.22. So basically, any drop to 35.20, I'm looking for a long. So any dip to here, I'm looking for a buy with silver. So those are your three trade setups for the week. S&P on the short side below 59.20. Long euro dollar at 114.20 with a stop and a reverse somewhere below 114, and long silver at the 38% retracement just above that $35 level. Guys and gals, I hope you have a great weekend, and I hope you've enjoyed the week ahead video. If you think these videos are beneficial to you, give me a thumbs up, subscribe to the channel. It's free to subscribe. Watch us on our daily shows. We have 2 daily shows that we do every day. Join us in the chat room. That's the best place to be connected with me and the other ForexAnalytix analysts. And you can see in our chat room, this is where all the conversations are happening all the time, all day long, every day. Well, not on the weekends, but you can see everybody's posting their charts. They're having conversations. You can see what people are looking at as far as what they're trading. If you're not having these conversations with traders around the world like we do, you should be involved in our community. So take advantage of it. It's $1 for 10 days to try us out. And with that being said, I want to wish you all a great, wonderful weekend. Thank you for spending your time with me. You all are wonderful. I'm going to see you on Monday morning on the Face Show. Have a great weekend. Talk to you then. Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.